Intel Corporation stock is performing relatively well to start the year in 2024 as a confluence of factors are working in its favor. But where could the stock end up by the end of the year? That's the question I'm going to answer in this video, using all of these estimates and assumptions to make a forecast and make a prediction of where I think Intel stock price could be by the end of 2024. So let's get into these details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the things I'm going to need is Intel's current stock price, and I mentioned it's been performing relatively well. The stock price is up from a low of around $24 per share up to about $43 per share, even though it's down from the highs of around $50 per share in recent months. Still, that's significantly lower than the stock price closer to $70 per share at its heights during 2020. Of course, that's when the company was experiencing the most beneficial impacts of the macroeconomic environment, as people spending more time at home needed more computers. Remember, before the pandemic, you were fine having one computer per household. But during the pandemic, that was no longer okay. You needed one computer for every individual that was in the household. So if you had 4 or 5 people in the house, everyone needed a computer because people were learning from home, they were working from home, they were entertaining from home, and so everyone needed a computer almost several hours per day, almost 8 hours per day. And so there was a significant boom in computer purchases where Intel generates a great deal of revenue, and that was working in its favor. However, the opposite became true around 2023, when people that bought computers in 2020 and 2021 no longer needed computers, and these are long-lasting goods. On average, 5 years replacement cycle for computers according to Intel management. So if you bought a computer in 2020, you probably won't buy another one until mid-2024, mid-2025, 2026 maybe, depending on how badly you need the latest and greatest technology. So that created a gap in revenue for Intel, and that created that big fall in stock price that you see here that Intel is trying to bounce out of. All right, I'm also going to need Intel's forward price to earnings ratio, and here's why this is important as a valuation metric. The price to earnings ratio is an important financial metric I use to determine which stock is more expensive or if a stock is too expensive. Let me show you this example here. I have 2 stocks, one trading at a market price of $100 and one trading at a market price of $12. The one trading at a market price of $100 has an earnings per share of $2.58, while the other has an earnings per share of just 11 cents. When we look at their price to earnings ratio, the one trading at a market price of 100 is trading at a price to earnings of 38.76, while the one trading at a market price of $12 is trading at a price to earnings of 114. So in this example, the one trading at a market price of 12 is actually more expensive because I'm paying 114 times earnings to purchase this stock. That means if the company was to pay me earnings per share every year as a dividend, it would take 114 years for me to receive my money back. Whereas the other stock, it would pay me back in 38.76 years. Now, there's a lot more to think about in this equation, but to simplify, that's an example that shows you why a company with a market price higher can actually be cheaper than a company with a market price that's lower. All right, so now that you understand the value of this metric, you can see Intel is trading at a forward PE of 18.66. According to this metric, this is the cheapest this stock has been going back all the way to January of 2021. So investors are getting Intel stock right now for the cheapest this stock has been in about 3 years. So it's relatively cheap according to its own past 3-year valuation metric. All right, I'm also going to need Intel's earnings per share forecast for 2025. When I'm getting a valuation for 2024 using the forward price to earnings ratio, I need the forecasted earnings per share for 2025. That number is right here, $2.24 for Intel. You see here in 2024, earnings per share of $1.35 are expected to explode higher to $2.24 in 2025. Why is that the case? Well, remember at the beginning of the video when I said people who bought computers generally keep them for 5 years? Well, 2025 is 5 years ahead of what time period? 2020, during the pandemic, when there was that initial boom in computer purchases, when people were initially sent home from school, sent home from work, and those people who bought computers in 2020 are going to upgrade and update their computers in 2025. At least that's what Wall Street analysts forecast. That's going to create the boom for Intel in 2025, where earnings per share are expected to increase by 65.8% on the year, and that's expected to continue even in 2026, where earnings per share are expected to grow by another 31% to $2.95. So Intel has excellent prospects for the next 2 to 3 years, given that cyclical factor in the computer industry that Intel will benefit from. So now that we have the numbers, let's go ahead and make the forecast and the stock price prediction for Intel. Earnings per share forecasted of $2.24 for 2025. Let me fix that on the fly. With the forward price to earnings of 18.66, which I got from here, 18.66, the forward price to earnings ratio, and the $2.24 EPS for 2025 I got from there. If all things remain as expected, Intel's stock price could reach $41.80 by the end of 2024. Now, that wouldn't be so great considering that the stock price is currently trading at $43.29. However, it wouldn't be unreasonable to expect Intel's price to earnings ratio to increase throughout the year. Why do I say that? Well, look at the forward price to earnings ratio. It's at the lowest level this stock has been in the last 3 years. If Intel does demonstrate that its prospects are improving and that replacement cycle is coming in as expected, then investors could get more enthusiastic about the stock and trade it at more closer towards its historical valuation metric, which is in the 20s, something in the 20s. These were unrealistic as well. It's not going to trade at a forward PE of 60, but it's also, I don't think, going to trade at a forward PE as low as 18.66. A forward PE of 22 is a more reasonable assumption to make, and that could increase the stock price to $49 per share by the end of 2024. That being said, if things get worse, its forward PE could fall further, and the stock price could fall to $33.60. And then in the worst case scenario, if the forward PE falls to 12, the stock price could fall to $26.88, a scenario that I think is relatively unlikely. My base case, the scenario where I think it's most likely, is the forward PE ratio around 22, I should say, and a stock price of around $49 per share. If I was to give a range of estimates, which I usually do, I would say the stock price could be between $48 per share and $52 per share by the end of 2024. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.